Good day, Doctor. Today our group is going to present financial performance for Gamuda Construction Berhad and Sunway Construction Group Berhad.
So first of all, let's take a look at the organizational context first. So for Gamuda company, it established at 1976, subsidiary of Gamuda Berhad. Meanwhile, for Sunway Construction Group Berhad, it established during 1977, and it also is a subsidiary of Sunway Group. So for Gamuda specialization is on large scale infrastructure projects. Meanwhile, for Sunway Construction Group Berhad, its specialization is on high-rise building, industrial complexes, and infrastructure. So for the Gamuda focus area is more at transportation infrastructure, water infrastructure, and eco-friendly urban development. Meanwhile, for Sunway Construction Group Berhad, its focus area is on more than residential, commercial, industrial construction, project management, civil engineering, and sustainable practice. So for the Gamuda Global Presence is at Vietnam, Singapore, Qatar, Australia, and so much more. Meanwhile, for Sunway Construction Group Berhad, its global presence is at Malaysia, Singapore, and Southeast Asia. First of all, the current ratio for Sunway Construction Group Berhad for 2021 is 1.02, for 2022 is 1.48, and 2023 is 1.32. Meanwhile, for the Gamuda Construction Berhad, its current ratio for 2021 is 2.21, 2022 is 1.92, and 2023 is 2.23. For overall, we can clearly see that Gamuda Construction Berhad has a better asset performance. Next, we look at the assist test ratio for Sunway Construction Group Berhad for 2021 reported 0.98, for 2022 reported 1.44, and 2023 is 1.29. Meanwhile, for the Gamuda Construction Berhad acid test ratio for 2021 reported 2.03, for 2022 1.81, and 2023 is 2.13. So Gamuda has a stronger ability to meet short-term liabilities without relying on its inventories. Next, let's take a look at the average receivable collection period for Sunway Construction Group Berhad for 2021 reported 126.78 days, for 2022 reported 114.78 days, and 2023 is 169.62 days. Meanwhile, for Gamuda Construction Berhad, its average receivable collection period for 2021 is 76.27 days, for 2022 is 64.84 days, for 2023 is 40.02 days. So this shows that Gamuda has a strong credit management practice as it has a shorter collection period. Next, for the account receivable turnover for Sunway Construction Group Berhad for 2021 reported 2.89 times, and for 2022 is 3.18 times. Meanwhile, for 2023 is 2.15 times. For the Gamuda Construction Berhad, its account receivable turnover for 2021 reported 4.79 times, for 2022 reported 5.63 times, and for 2023 reported 9.12 times. So overall, we can clearly see that Gamuda has more efficiency on collects payment from customer relative to its credit sales. Next, for the inventory turnover ratio for Sunway Construction Group Berhad for 2021 reported 34.11 times, for 2022 reported 35.94 times, and for 2023 is 44.81 times. Meanwhile, for Gamuda Construction Berhad, its inventory turnover ratio for 2021 is 0.36 times, for 2022 is 0.39 times, and for 2023 is 0.50 times. So this shows that Sunway has a more efficient use on inventory and Sunway got a better inventory management.
The
The
operating return
operating
on
return on
assets
assets
for Sunway
for Sunway
Construction Berhad
Construction Berhad
show
show
an
an
inconsistent
inconsistent
from
from
7.5% in
7.5%
the
in
year
the year
2021 to
2021 to
8.3% in the year
8.3% in the year
2022 and
2022
decreased to
and decreased to
7.3% in the year
7.3% in the year
2023. The
The
operating
operating
return
return
on
on
assets
assets
for
for
Gamuda Construction
Gamuda
Berhad show
Construction
an
Berhad show
increase
an increase
continuously from
continuously
from 3.18% in the year
3.18% in the year
2021 to
2021 to
4.4% in
4.4%
the
in the
year
year 2022.
2022
In
and 2023.
2023,
Gamuda Construction
Gamuda
Berhad earning
Construction
is
Berhad
increased
earning
in
is
this
increased
period
in this period
because the
because the
stronger
stronger
performance in
performance
both
in both
construction and
construction
property.
and property.
So Sunway
So Sunway
Construction Berhad is
Construction
more
Berhad
better
is
than
more better
Gamuda
than
Construction Berhad.
Gamuda Construction Berhad.
The operating profit margin for Sunway Construction Berhad is showed inconsistent result in its operating profit margin as it increased from 8.1% in the year 2021 to 8.7% in the year 2022, but decreased to 8.4% in the year 2023. The operating profits for Gamuda Construction Berhad it shows inconsistent result in its operating profit margin as it increased from 16.6% in the year 2021 to 18.3% in the year 2022, but decreased to 12.9% in the year 2023. So Gamuda Construction Berhad is more better than Sunway Construction Group Berhad. The total asset turnover of Sunway Construction Group Berhad showed an inconsistent. It increased from 0.92 times in the year 2021 to 0.96 times in the year 2022, but decreased slightly to 0.87 times in 2023. The total asset turnover for Gamuda Construction Berhad increased from 0.19 times in 2021 to 0.35 times in the 2023, supported by the company's significant revenue growth. So Sunway Construction Group Berhad is more better than Gamuda Construction Berhad. Fixed asset turnover of Sunway Construction Group Berhad show inconsistent. In 2021, its fixed asset turnover report 2.04 times increased to 20.60 times in 2022, but then decreased to 3.17 times in 2023. Fixed asset turnover for Gamuda is consistently increased from 3.66 times in 2021 to 4.99 times in 2023. This growth can be attributed to Gamuda Construction Berhad strategic initiative to enhance the efficiency of its fixed assets. So Gamuda Construction Berhad is more better than Sunway Construction Berhad.
Well, in terms of debt ratio, we can clearly see that both Sunway Construction Group Berhad and Gamuda Construction Berhad are increasing from year 2021 to 2023. But in the case of a steady, consistent rise, we can clearly see that Gamuda Construction Berhad has a less increase in debt ratio compared to Sunway Construction Berhad, indicating that Gamuda has a less increase in debt ratio compared to Sunway Construction Berhad. But in terms of time interest earned or TIE, we could clearly see that both Sunway Construction Group Berhad and Gamuda Construction Berhad have an increase in number from year 2021 to 2023. But Sunway Construction Group Berhad has the most increase in time interest earned, which in 2023 increased to 303.89% compared to Gamuda Construction Berhad, who only earned 13.49% in 2023, indicating that Sunway Construction Group Berhad has a better financial stability and a better health in its finance. For return of equity (ROE), we can clearly see that both companies have an inconsistent trend. For example, for Sunway Construction Group Berhad, the return on equity in 2021 was 15.5% and increased to 16.9% in 2022, but decreased to 16.4% in 2023, indicating an inconsistent trend in the company. Whilst for Gamuda Construction Berhad, the return on equity in 2021 was 8.9% and decreased to 8.4% in 2022, but had a massive increase in 2023, which was a number worth 18.60, indicating and comparing from both companies, we can clearly see that Gamuda Construction Berhad had a better return on equity to its investors in 2023. For price-earning ratio, we can still see an inconsistent trend also in both companies. For Sunway Construction Group Berhad, the price-earning ratio for 2021 was 9.39 and decreased to 8.78 in 2022, but then increased back to 11.2 in the year 2022, the year 2023. Whilst for Gamuda Construction Berhad, the price-earning ratio for 2021 was 3.03, then increased to 6.31 in 2022, but then suddenly had a massive collapse in its value, which was recorded as 3.12 in 2023. Comparing both of the analyses, we can clearly see that Sunway Construction Group Berhad had a better had a better ratio where investors are willing to pay more for each dollar of earning, which reflects the company's growth expectations. For price-book ratio, for Sunway Construction Group Berhad was 29.5 in 2021 and then decreased to 13.77 in 2022, but then increased again to 20.03 in 2023. Whilst for Gamuda Construction Berhad, the price-book ratio in 2021 was 40.31 and then had a massive decrease to 16.76 in 2022 and then also decreased to 4.36 in 2023. Comparing both companies, you could see that Sunway Construction Group Berhad had a more better way of efficiently to generate profit in the company's asset and also had a better and a higher income for its investors.
Future performance for Gamuda Construction Berhad. Gamuda Construction Berhad's financial performance from 2021 to 2023 shows improvement in liquidity and operational efficiency. The current equity ratios indicate better ability to meet short-term obligations. Operational efficiency also improved with better receivable management, more efficient inventory turnover, and effective credit policies. Annual revenue surged significantly from Rm 5.0 billion in 2021 to Rm 15 billion in 2023, highlighting the company's operational success. Strategic initiatives such as improved scheduling and increased productivity have positioned the company for future growth and stability. Future performance for Sunway Construction Group Berhad. Sunway Construction Group Berhad has shown strong financial performance with Rm 2.67 billion in revenue in 2023, a 24% increase from the previous year, and a net income of Rm 145.1 million, up 7.3%. Despite a slight drop in liquidity ratios and a small increase in collection time, the company remains financially stable. Good management of receivable and working capital supports cash flow. Sunway's operations in construction, real estate, and retail help reduce risk. Projects like Sunway Velocity 2 and Sunway Medical Center show its strong execution. Moving forward, Sunway is well positioned for growth, focusing on efficiency and sustainability.
Finally, for the investment recommendation, we strongly agree that Sunway Construction Group Berhad to invest because firstly, it has strong profitability, which is good at making profit with solid earning compared to its investment. This makes it a reliable choice for investors looking for good returns. Second, efficient debt management. Even though Sunway debt is increasing, it is still able to manage it well thanks to strong profit. This means they're unlikely to face cash flow issues. Next is conservative investment for long-term returns. Sunway is a safe bet for those looking for steady and reliable growth over time with a proven ability to handle challenge and maintain stability. And lastly, sustained growth potential. Sunway has strategies in place to keep growing as long as they manage debt and continue running their business efficiently. They're likely to keep expanding. Thank you.